Kaspar, I am really curious how stocks have behaved after a split.
Why are you asking that, Martin?
Because of the stock split of Google tomorrow, Friday, and
after closing of the market.
After closing of the market, yeah.
Yeah. So we analyzed that,
yes,
and we have some interesting conclusions, I think,
definitely,
about it.
Definitely.
Google.
But I think what I did, I went into the history of Google, and I think it's quite always interesting to know for people. So not so much as an investor, you don't have anything about it, but just the history where this company comes from. And
Alphabet, you mean?
Alphabet, yes. But it all started with Google. You know where the name comes from? I think you know it, no?
I knew it.
It's a misspelling of Google,
yeah,
and that's a 1 with 100 zeros. So a Google is a 1 with 100 zeros. That's a number. So 1 with 100 zeros is a Google.
I thought it was something with goggles.
No, it comes from that, apparently. And that's because it's an algorithm that searches on the internet for what you ever type in. So it is founded in 1996 by two guys that were on Stanford University, and their names were Larry Page and Sergey Brin. Two guys, and they had the initiative to build an algorithm that went into the internet and looked for whatever you wanted. Then, how successful were they? Well, they launched Google as itself in 1998. So 2 years after they started researching and testing it, etc. Initially, the company had a name called Backrub.
Really?
Backrub, yeah. And then they changed that later to Google. The first funding they received was $100,000. That was in 1998. So to get going, they get a funding of $100,000. The year after, in 1999, they received an additional funding because they presented a model which was really apparently really successful, of 25 million US dollars. So already the next year, so really quickly.
Were they the first search engine?
They were. You got me there. I'm not sure.
I'm asking because I don't know.
I put it in the comments because otherwise we have to stop the video and do it again. So I'll put it in the comments. I look it up and I put it in the comments straight away. It's a good question. I don't know if they were the first one. But so they eventually went for an IPO, and that IPO that was in 2004. I think they are 2004. And the initial projections were that we're going to raise 4 billion. But within very short period afterwards, they already had a market cap of 25 billion. So all the employees that had stock options and stocks, they were paper millionaires within the first week after the IPO. So that was really, really successful. If we look at the stock right now, and then you're going to talk about the stock split, it's on itself. The stock at the moment.
IPO is also okay.
That's also a corporate action, of course, going to the market, initial public offering. But the current share price is about 2,190. And there's many reasons why you would do a stock split. I think we're going to explain it now. We're going to show a video.
Of you?
Of me, yes. And from what is that?
That's from our academy, our online academy.
Yeah.
There you can for all kind of courses about options or about stocks on different levels. And I think we will show a really short video of you where you explain what a stock split is. It's not too complicated.
No.
We will do that.
It's a stocks for beginners, so you know exactly what we are talking about. So going back to the stock, $2,190 tomorrow. That will be.
What is the price tomorrow?
Tomorrow is still 2,000. I don't know what the price is tomorrow, but I know at least what they're going to do. They're going to split it in more shares. If we look at the profit per share,
and it came from 3,000.
Yeah, 3,000 something. We look at the trading range this year. It's all the time trading between 2,400 and 2,000 and a little bit.
In the last part of the.
Yes. But what I have to say, I looked at it, and I also see that each time the top is slightly higher, and the bottom when it goes back down is also each time a little bit higher. So we see it is going down, but it goes down each time to a lower level.
You have to
slightly, but you can see it's an upgoing trend, and hopefully that repeats. What you also said, if it goes through the 2,000. Well, tomorrow it will go through that because the price will be different on Monday, but then you might see maybe some other prices soon. Projections that the profit per share, the earnings per share will go to 173. Current price earnings is approximately 25, and they will go to 12.90. So in that sense, the projections of the analyst based on what we know today are for Google quite positive.
Definitely.
Yeah. Then about the stock split.
Okay. Now we show the video?
Yes, we're going to launch the video and we're back in about 30 seconds. Okay, so when you talk about corporate actions, there are many different sorts of corporate actions, but in this specific lesson, I am going to explain you the split and the reverse split. First, I want to talk with you about the split. And I want to do that based on an example. If we look at the share of Tesla, we all know the car company Tesla, or the robot company as they start calling themselves nowadays. They had a share price, the company had a share price, they had shares outstanding for a value of $2,300 per share. Well, they decided that that price was too high and they want to have a more accessible price. That was not the only reason, there were obviously more reasons to do so. And they brought out for each share 5 new shares. So the price was approximately 2,300 something, and then the price reduced per share to approximately 400 and something. So US dollars I'm talking here about, yeah? So the most important thing is that the value of the company remains the same. The only thing is that the cake is split up in more pieces, and you as an owner of the shares receive the same amount of cake, but in more portions, right?
Okay, we're back. The stock split, a lot of people, investors are always talking about that. That's why I was mentioning a corporate action. Should I do something before a corporate action?
Yeah.
Corporate action. This is also corporate action. And we will explain what to do. I think that, why do they do it, first of all? Now.
Why they do it now?
Yeah, no, not now, but why do they do it?
Why do companies do a stock split?
Yeah.
Yeah, in general it has various reasons. Now you can say you want to attract more retail investors, for instance, because you're going to offer it for a lower price. Another thing is to also show some sort of signal of strength. We had a lot of growth, our share price has gone up, we can now lower the price.
In this case with Google, it's not Google, the case, yeah.
That might be the case, because it went up. It depends also from of course, from the
no,
all-time
but
highs.
It's an expensive share. So
it's expensive, yeah.
I mean, not relatively, but in an absolute sin, because one share costs you $2,000 something dollars.
Yeah.
And that's more than, for example, ING did cost you, I don't know, 9
euros.
Yeah. So it's an expensive share. And to do a split, the price per share is of course lower and it's more accessible for small investors. But I think nowadays that reason doesn't go up anymore, mainly due to brokers like Robinhood, because Robinhood, that's an American stockbroker. If you want to buy a share of Google at one share, but you don't have $2,000 something dollars, you have only $500. What does Robinhood do? They search for another like $1,600, and together with those people, you don't know where they are, but they buy for you the share. Yeah. So I think that argument doesn't work anymore in the last days.
Yeah, unless you really want to own the stock and not some sort of.
Yeah, okay, but you saw that they have a lot of clients. I think 11 million clients. So for smaller retail, you can call them smaller retail clients, I think that they have already possibilities to buy those shares.
Yeah, fractions. Yeah.
So what will they do? I think the main reason is to make it more attractable.
I think so. Attractive, yeah.
So, but not maybe for retail investors, but more for maybe on average investors, I think. So it's going to be a 1 to 20 in this case. So you get 19 free shares.
Yeah,
you can also say it like that. 19 free shares.
You could say that.
You're for one share of Google.
Tomorrow you got 19.
In the weekend you have 20 shares of Google. It's the same amount, you know that, but you have more shares. You can now say I have 20
Google shares. Yeah.
Google.
If you have 1,000, tomorrow you got 20,000.
Yeah.
Although that's a lot, but.
This is not the first time they are doing it. The first time was in April 2014, and then the price went from 1,998 to 1,000. So it was a split.
2 to 1.
Almost, yeah. I don't know what it is. It's like from the casino that took a small part of it. So this is only the second time. I saw an interesting article of Rocky White. First of all, I think his name is fantastic. Rocky White.
Rocky White, yeah.
He wrote a white paper. And what he did, he looked at stock splits from the US market from 2010 until now. And that were in total 190 stock splits.
That's quite some data.
Yeah, most of them are 2 to 1. So the split, they divided by 2. He looked at stock splits with 4-1 or higher. So in this case, it's 20-1. So this is higher.
It's even higher.
Yeah, he came out on 33 data points. So out of the 190, 33 had a stock split 4-1 or higher.
Mm-hmm.
And what was the result? The result was if he compared the average return, he also looked at the median, but in this case we will talk about the average return of those 33 stock splits, the result of the yield of those companies compared to the S&P 500. And then what you see, he said, okay, I'm looking at 2 weeks after the stock split, 1 month, 3 months and 6 months.
Mm-hmm.
His conclusion is, first 2 weeks you should not have those stocks. On average, they lost 1.4% and the S&P was only almost 0 in those first 2 weeks.
But then after 2 weeks?
After 2 weeks, 1 month. On average, those shares gained 2.1%.
Mm-hmm.
The S&P only 0.27.
Yeah.
3 months, they also did it better, 4.3 against 2.5.
Yeah.
But then they're losing it again. After 6 months, those 33 shares with the stock split 4-1 or higher, they gained 4 or 5.4%, and the average market's almost 6.5%.
Okay, so conclusion here is,
if you have them or you want to buy them, you better don't do that in the first 2 weeks.
Yeah.
But buy them after 1 month and let them go after 3 months. And I know how it is. Investors, they all like this and nobody does it.
You mean this method?
Yeah.
Yeah. I'm gonna. You know what we're going to do? We're going to check it.
Yeah.
From now till December, what is happening with Google after this, and we're going to measure the results. And with Christmas, we're going to share it with you.
I think by mentioning it to you, maybe it gives you some extra support if you have Google or you wanted to buy Google already, to take into consideration, because I know nobody will base from zero this kind of strategy, so it can give you some comfort.
No, but it's statistics, and statistics can help you to
make decisions.
To make decisions.
Yeah, and that's we looked in the past about the things like sell in May and remember to come back in September, or the camping house. We made this analysis and they are not working.
No.
In this case, you see some quite significant results.
Yeah.
There are some. He has some more data. So again, Rocky White. If you Google him, you can find some interesting things. And if you look here, so this was the first reverse split in April 2014. And what do you see? What happened with the?
It went down initially.
Yeah, down, and then it stayed almost the same for 1 year.
Yeah, 100%.
So
interesting stuff, Kaspar.
Yeah. Now just to go a little bit away from the energy, the inflation, the interest rates.
Yeah.
A little bit more back to the market.
Yeah, we spoke about Monday about more difficult stuff, currencies and that, etc. But I think this is also very relevant because
to look at a different way.
Yeah.
Next stock split, Tesla probably for the second time.
Yeah. There's a lot more coming up this year. It's about 10 big companies. Nvidia. QuantumScape, Taiwan Semiconductors, I think also.
They had good figures.
Yeah. So a lot of companies doing these stock splits.
So
that's a wrap, I think.
Yeah.
Thank you for watching, everybody.
Give us your thumbs up.
Give us your thumbs up. If you have a comment, I will put in the comment something which I promised at the beginning of the video, which I don't remember now, so I have to look it back, but I will do it.
What was the first search engine?
That was it. Thank you. Somebody's awake. And we'll see you next week.
Thank you for watching. Bye-bye.